Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and talk about opportunities in the market. Now, if you haven't realized, there's been a lot of volatility. There's been a lot of ways. I'm sure you've seen some stocks go up some significant amount of points, and you're just like, man, boy, oh boy, don't I wish I've taken advantage of that. And the thing is, if you don't understand technical analysis, which is almost like a short-term GPS, you're going to have a hard time essentially trying to trade these types of markets. There's a lot of retail investors. They're still hanging on, but a lot of them are essentially, and I have a graph for you from The Economist that I'll point out later and probably in the next video that talks about how a lot of retail investors and options are losing money right now, hand over fist. And, it just cares to show you where retail investors are at right now. So these big moves that you see that are basically down or up, these are all algos and maybe some form of retail investors. So what I'm going to share with you today is tomorrow, the Federal Reserve is essentially going to tell us whether or not they are going to be increasing interest rates or not. The consensus, if you go ahead and look, 87% of the market believes that the Federal Reserve, and by the way, this is from our stock terminal, 87% of the stock market believes there's an 87% chance that they're going to increase by 25 basis points, rather than 12% chance believe that they are not going to increase at all. Now, again, ladies and gentlemen, it is very crucially clear to basically tell you that we got three bank crises, right? Three different types of banks that have literally flipped over due to the fact that the Federal Reserve has increased interest rates at the fastest it has ever done in the history of all interest rate increases. And even a bank in, Credit Suisse went ahead and flipped over. So it's very safe to say, hello, Mr. Nana. What's your name? I'm just kidding if you know that song. Okay. But in all seriousness here, it's very interesting to see this because most folks are going ahead and basically saying, there's not going to be a rate hike, Goldman Sachs. Some folks are going to say, well, Federal Reserve is going to decrease interest rates, Elon Musk, but he says some silly things. I believe, in my humble opinion, I believe that this is the mission of what Jerome Powell wanted. Jerome Powell, maybe this is what the Federal Reserve wanted. They wanted to just basically crack, and whoever cracks, they bail them out. Instead of quantitating easing, completely, they're just basically making the economy harder and harder until the weak crack, and then they fix those cracks. So they might go ahead and increase interest rates tomorrow by 25 basis points. But to be quite frankly honest, it'll just be a psychological increase because these 25 basis points are not really going to be felt by the economy until maybe a year from now, right? So this is very incredibly important, concept to understand. And the biggest thing right now that you could do, in my opinion, again, this is not financial advice. I recommend obviously doing your own due diligence, is looking at companies. Essentially, what I'm doing is I'm looking at companies with high volatility. The market is essentially waiting for an extreme fear VIX, which, to be quite frankly honest, we really haven't seen. We have just seen the VIX just oscillate between, there you go, oscillate between a high and a low. The market is fairly neutral right now. In fact, in some instances, it's screaming a buy. If you look at it right now, the market is not really that fearful. I mean, yeah, 25, it's pretty there, but greater than 30 is when you see fear. And if you go ahead and look at the history, and if we just go ahead and reload the fear and greed index here, in terms of the VIX, you can see it's when you get these spikes, do we really see opportunity in the market? So, there's some folks that are waiting for that. But as you can see, these spikes don't really happen a lot. They happen maybe once every 10 plus years. So, and sometimes the spikes are kind of tiny in relative. So we don't know. All I know is that we are definitely near a crisis. I mean, for Warren Buffett to go into the White House to talk to President Biden, it's definitely important. So what I have here for you guys is Clover Health. Any ideas about the dark pools? This video is not going to be targeted about dark pools. It's going to be basically day trading opportunities, Federal Reserve to release interest rate decisions. So we could talk about that later for sure. But definitely this video is going to focus on, essentially what you can do to, maximize your returns at least what I'm doing. So I went ahead and I put a quiz up here, and I said, which of the following signals indicate a potential exit point in the in a trade using technical analysis? And this is very simple. Okay, I'm not trying to trick you guys here, right? This is a very simple. There is a little trick in there, but it's to serve an educational point. Again, there are some people that go ahead and will disagree with this approach, but again, you're not, we're not going to go ahead and be expert day traders. And, no, I want to be better than 90% of all day traders. That's my goal. And then I am obviously better than those day traders because I know fundamentals. Okay. So if you mix those two, you're going to be better than, most folks, right? So the answers here, answer A, price breaks above the resistance level. No, if it breaks above the resistance level, why would you exit, right? Price moves above the upper Bollinger Band. I mean, okay, potentially. It's a tricky question, right? Price moves below the lower Bollinger Band. Okay, yes, about maybe 25%, I would say. But the real answer here, or at least my intention of the real answer, is price actions breaks under the exponential moving average. Okay, so most folks don't trade like this, but I'll give you an example. So you see here, this blue line here, this is the exponential moving average. Again, for day trading, I like to use exponential. For long term, I like to use simple moving average. Overall, whenever I see the price action above the exponential, and sure enough, above the middle band of the Bollinger Bands, and when we are in a positive trend on the MACD, I like to essentially ride this particular movement and enjoy this beautiful money being gained until we fail, until we break this price action trend. Now, you can essentially go ahead and continue with this. I don't. Some depends on your risk, but it broke my exponential. I get out. Now, some folks went ahead and got in, scalped it a little bit, but then since we got a double top, we went ahead and went down hard. Okay, so that's basically that answer there. So let's go ahead and let's just quickly, before we go over Clover Health, let's go over FRC today. Now, a lot of our folks today, I went ahead and I posted great day trading opportunity. If you go ahead and I just basically went ahead and lost my technical analysis here, so I'm going to have to reshare this. So this is part of the Al Stock Trades website. We integrated in here for easy navigation for folks. So I'm going to go ahead and just, you can see the indicators here, moving average. We'll go ahead and do the MAC, and then we'll just do what we're doing this live here, and then we'll go ahead and do the Bollinger Bands here. So we'll go ahead and do these here so that you can kind of see what I'm looking at here. So, and then this is 5 minutes. So I like to use 5 minutes. Sometimes depending on the trade, I may look at the 1 minute like a hawk, So the big thing right now is if you go ahead and if you go to FRC stock, I like to use Google here to show you kind of, where it was up. Originally, it was actually up 40%. Right here was actually, if you go here and if you go from this angle, you're actually up 54% on the day. Okay. And the question is, a lot of folks bought here, and bought here. You're going to have a lot of dumb traders, a lot of sadly dumb, or I don't want to be mean, a lot of, because I don't want to be rude here. Okay. We all started somewhere in this lifetime. Okay. But there's a lot of newbies in the market, that uneducated folks that bought around here. Okay. And I'm going to tell you why this is an error. That was an error. And I'm going to show you why it was an error. So overall, a great time to get in to FRC was yesterday, right? Again, when I say get in, this is very short term. I don't know the future of FRC. Yes, great. I look at their fundamentals and everything, but this is a problem when you talk about day trading. A lot of folks think they hold it until they hold it like they're herpes, right? But you could take a cyclovir and cure that, right? But they hold it tight. I'm talking day trade, all right? It's a get in, get out. Think of it like you're a player, okay? Okay, so essentially here, what we're looking at is a great time to have gotten in was actually yesterday. And why do I say yesterday? Well, you already basically see the price under the exponential moving average and the Bollinger Bands, which obviously indicates that we're still in a downtrend. As you can see here, it's very clear. This is not rocket science. I don't know why a lot of people complicate technical analysis. It is not rocket science. It's very simple. Okay. Here's the price. They complicate it so much to a point where they forget their own indicators. You know what I mean? When they lose money, there's no, again, when shit hits the fan, you want to just look at simple lines. Okay. You don't want to have a million. Okay. So it's very simple. The price action is under the freaking orange and blue line. Okay. That's it. It's in a freaking downtrend. Okay. So, but what you start to see is you have to see volume pick. So below here is volume. So you can see volume elevating, picking up. And then you can start to see the price action go up. So there's a lot of people that bought the day before because look at the MACD. The MACD is set up like literally sexy. The MACD is beautiful, right? So then people got this jump. Some sold out. But if you look at the technicals, the price action was above the blue exponential line and the middle part of the Bollinger. Now you could have written this up from here and you could have gotten out from there. And that's a valid exit. And then you wait. You got conference, our AI support and resistance graphs and our Fibonacci sequence retracements to help you. And then you could have written that until, again, the price action is above the freaking blue and orange line. Again, not rocket science. And then you ride, pretty much 17 all the way up here to 1849, right? And then you start to fall. And unfortunately, a lot of these folks bought here. Why in the world would you buy here? Why in the world would you literally buy here? If you look at the RSI, I'm sure if we can go ahead and just remove this here and make it simple, and we could just add the RSI here really quickly. If you look at the RSI, I guarantee you it was probably oversold. Look at that. Again, for most folks, 70 means oversold. 20 means 70 means oversold. 70 means overbought and 20 means oversold. My apologies. I just had food and all the blood is going to my blood supply, my GI here. Okay, so this means that you're about to get a sell-off. It means that it's expensive from the technical analysis perspective. But most folks don't have this. They don't know what this is. But it's so simple. It's so simple. High RSI, the MACD is about to slowly flip, volume is going down, and the price action is starting to go below the exponential moving average. Very clear we're on a negative downtrend. All right, so tomorrow, what's tomorrow going to be like? Well, to me, it looks like we're setting ourselves down for a lower MACD. And again, I could be wrong, right? Because the market is the market. It doesn't make sense in the short term. But the way I like to see, and this is where the opportunity comes in, is tomorrow we might start off negative. And as we get closer and closer to the FOMC meeting, regardless, I believe, depending if we do not bump interest rates, or if we do 25 and then his meeting is very dovish, then we might rally. And depending on what these stocks are, it depends. If he puts 25 basis points, expect this to go down like a clown, okay? Then you can basically rinse and repeat this and enjoy making money, rinse and repeat. Now, for Clover Health, very quickly. Clover Health, I like it because, again, we're on the MACD is going lower. And I like to day trade because, I really think this is a great price right now. 91 cents, it's just one of those great ones, right? And we can go ahead and we can look at the book value of Clover here. I think what we can do is just really quickly, just might as well pull it up here from our stock terminal. If we can take a look at it real quickly here. Un momento. We have the, let's zoom in, and let's look at book value. So the book value, from what it looks like to me, the book value now went up. It is actually $1.25. Now what we can do is we can verify that. There's a couple ways to do that, but we can verify this and go to here, and then let's go to more financials, and then we could just go to overview, type in book, and here's the book value. And then doesn't quite tell you, at least this one. Well, this is no worries. The book value here is where did I put it? $1.25. So already we know that the book value now is higher. Okay. That is good to hear. This is good. This is what I want to see. And we know now the stock is below the book value, which let me just exit here. So I think this is a wonderful opportunity to get in and to get out. Now, when I say get in and get out, again, the reason why I like trading Clover or Apple or stocks that I have high conviction in is, let's say, for example, if I trade it and all of a sudden the stock drops down to 50 cents. I don't think it will, but let's say it drops down to 50 cents. Okay, what am I going to do? I'll hold. I don't care. It's a long-term play. But let's say, for example, I go in, will it kill me to buy down here and sell up here? Will it really kill me? Right? Will it kill me? Would it have killed me pre-earnings to put, money in here and then basically sell up here? No, of course it wouldn't kill me. Why not? Why not? Right? You see volume slowly going up and volume exploded, right? And then you saw volume here go down, volume go up, and then the price went up and down. And then you can look below, but the price is below the price action. And then you pull out your day trading money and you wait. You wait. Oh, price went above. Great to get in. Oh, went below, up, below. Again, and then the volume picked up here. And then you get in. So long story short, what I'm going to be looking at is the volume. Okay. The volume, the MACD, and the price action. And then I'm going to go ahead and I'm going to scalp this. I'm going to get in and get out. If it goes up 10%, well, that's good. That's around $2,000 to $4,000 right there. Easy money, right? So in any case, that's pretty much what's happening right now. Sorry, I usually don't get this technical when it comes to technical. Literally, you have to. It's called technical analysis, right? But I'm just letting you know that this is a great opportunity to make money on the side without even having to really put in a lot of effort. I mean, this is not hard, ladies and gentlemen. And we put 5 minutes, but since it's not a lot of volume, it's probably even worse if you put the minutes. So you might even want to use 30 minutes to give you a better data point, since there's not a lot. So you could use a 30-minute and really see. I think trading Clover right now on where it's at, using the 30 minutes is actually really great. I mean, come on, 30 minutes for day trading. I mean, this is just easy, right? Obviously have the other charts up so you can see, right, and have them juxtaposed on each other. But that's all, guys. I'm going to go ahead and go over this really quickly. Clove 93 cents, and there is no dark pool conspiracy. Clove is only buying a small trader, looks like. That was my question. I usually wait for the stock to go down 10% and sell and try. Yeah, exactly. I mean, you make good, you just make something on the side, right? All right, let's see here. Good. Well, yeah, enjoy it. And I hope it was very helpful. Okay. But I think that's it, guys. That's pretty much what I have for you here. If you go ahead and let me see here. Yeah, I think that's it. If you guys have any questions, let me know. The answer to this question is, obviously could be C or D, but the answer for me, what I wanted to convey to you is D. That's what I like to look at, right? Right. So that's all I have for you guys. I hope this was helpful. There'll be a link down below if you guys want to learn more about all the services that we used up here, and also regarding our intrinsic value calculation. Just to be very clear, we are going to make a fundamental analysis video on Clover Health. Understand that as the company becomes more profitable and adds more value, the book value is going to go up. And as the book value goes up, the company value goes up. And let's very quickly here take a look at net income here. Once these need to update a little bit more, we're going to go ahead and do another fundamental analysis video. All right, guys. Pleasure, and it's a privilege, and I'll see you on the next one.